GM, good morning. Welcome to the Milk Road Show, the daily crypto show where our insights are as crisp as the sound of opening a fresh can of beer at the end of a hard day of work. I'm your host, Shay Hamilton. Bitcoin is above 106,000. Markets are green, generally responding well to Trump's first day in office. Although, did Trump forget about us? No executive orders yet. Nothing seems to be happening on the crypto front. Maybe that's due to our unreasonable expectations that we are the only thing that matters in this world. But also, we're going to talk about what we think Trump might be doing the rest of this week, coming days as he gets settled into office. US debt. What is going on here? It is past the $36 trillion ceiling. What is this ceiling? Why is this a danger zone? What does this mean for the US and for markets and macro? Here to break it all down with us today is Scott Melker, the one and only longtime crypto educator, investor, the man behind the Wolf of All Streets podcast and the Wolf Den newsletter. Few amazing resources for everybody that is investing in the crypto space. Before we jump in and hear from Scott, we need to take a moment to hear from our sponsors who make the show possible. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Scott, welcome to the Milk Road Show.
Thank you, man. I think you're going to have to rebrand the Melker Road Show.
Why do you say that?
Scott, no. Well, yeah, when I was a kid, they would make fun of me and call me Melker, but, Melker Road.
Like Milker,
it was
like
a quick dad joke pun to come in
Milker.
with. Came in hot, sorry. You can just edit that out.
We can go with dad jokes. I'm a young dad, so maybe I'm not quite at your, I need a couple more gray hairs before I get to that level.
I got a lot of them.
Okay, let's start with the biggest news yesterday was Trump's inauguration. Although Trump's meme coin sort of stole the show over the weekend. But just first thoughts, inauguration, how markets have responded so far.
Markets have responded well. I don't think that that's a particularly large surprise. I think the sell the news event a lot of people were looking for sort of happened the weeks before the inauguration itself, with people sort of anticipating what was going to happen. We know that markets hate uncertainty, and we saw yields kind of rising during that time. A lot of conjecture as to what Trump would do in his early days, and I think just a general wait and see attitude for the inauguration itself. So I think no surprise that we sort of had a bit of a correction, and now things are back underway to the upside. We're talking here on January 21st, as you said, Bitcoin's above 106,000. S&P is rising. People seem to be risk on and greedy at the moment. I think as far as the crypto side, people have been disappointed because they're whiny little children who live in an echo chamber and believe that they're the most important people in the world. And they're not. Things like immigration tend to be more important, I guess, than what's going to happen to DeFi and meme tokens.
No way.
But, here we are. I think that there was an expectation we would get some executive orders related to crypto, or at least that he would mention it in the inauguration speech. I think that was a pipe dream. But I do think in these first 200 executive orders that are coming, whether that's today or in the coming days, we are going to see some mention of crypto and some movement. And frankly, the appointments he's made, the fact that he launched a meme coin, for better or for worse, the things that he's done and the signals we've seen show you exactly what it's going to be like for crypto in the next 4 years in the United States, whether we get a direct executive order or mention in these first days or not. I would love to see Ross Ulbricht pardoned here, as he said, a day one expectation. That would be awesome to see on day 2 or day 3. Otherwise, I'm really not holding my breath. I think we'll get some superficial mentions and then see some really, comprehensive policy down the road.
Mm-hmm, mm-hmm. So short term, do you expect volatility? Because I think what Trump brings is he does bring maybe we have certainty on the whole of the next 4 years and what this administration will look like. I mean, certainty might be a strong word, but we certainly have directional idea, and we're definitely different than we've been for the past 4 years. So anything's an improvement upon that. But I think, launching a meme coin, his behavior is quite erratic. The things that he tends to do. What do you expect to see over the just short term, next week, few weeks?
I expect volatility, right? For the same reasons that I sort of outlined before. I think that the market's going to have an overreaction to every word out of his mouth, right? Because we're starting to get a feel or looking to get a feel for what he's actually going to do once again, in the coming months and certainly in the coming years. Will we get a massive correction? I have no idea, but I do think we're just going to be on a roller coaster here as the dust starts to settle. So Bitcoin up, down, and all around, but nothing new there for crypto. But I would expect generally kind of the same for markets. I mean, there's a lot of speculation as to what tariffs would look like. We know that he's a shrewd negotiator and loves to throw out big numbers first and see where he lands. But you have, him saying to Canada and Mexico, who are neighbors and partners, casually, yeah, 25% tariff, and then Trudeau coming back for as much as his voice is worth at this point. We're going to go dollar for dollar with them on tariffs. So impressive, actually, that markets just continue to rise sort of in the face of all of this uncertainty here. But at the end of the day, I think people are just expecting deregulation, that Doge will step in and cut some government waste. I think most likely everyone believes that the money printer will go burr, and that generally we're just going to see a hell of a lot of liquidity coming in the market. I mean, we even have the debt ceiling, as you said today. I had it at 36.3 trillion on the debt clock, but ballparking at 36 trillion being the debt ceiling expiring today. We know that the Treasury and Yellen saying they're going to have to take extraordinary measures. Well, that usually means dumping a lot of liquidity into the system, which historically has been really good for risk assets as well. So I think there's a lot going on here. It's really hard to parse what single thing is sending markets in any direction at a given time. Clearly, though, sentiment is very risk on.
Mm-hmm, mm-hmm. Let's chat about the debt ceiling since you brought it up. For our listeners who don't understand it, can you just explain that quickly?
Yeah, it's just how much it's a meme. As much as the Trump meme coin is a meme, because every time we have this dramatic debt ceiling, will they raise it? What's going to happen? They just raise it, right? There's never been a
Like,
question.
doesn't
It just
matter.
keeps going
Like,
up. I think Trump has even said before being president this time, just get rid of it. Like, why do we even have a debt ceiling? It's a joke. I think it was introduced in like the 1917, something like that. It's basically the total legislative limit on the amount of national debt the U.S. Treasury can incur. How much debt can we take on to fund all the liabilities and programs that we have in the United States? And we know that our budget just keeps getting bigger, right? And more importantly, we're in a debt spiral because the debt service on the debt that keeps increasing is larger than any other single line item on our liabilities anyways, right? It used to be that the military was the biggest spending item at, 850 billion. Well, now just paying the interest on our debt is over $1 trillion a year, and that is only going to grow. There's no way out of that except for to just continually print money and debase the currency. And I think that's what people are expecting. Now, listen, it's great that Elon Musk is going to come in and they have the Department of Government Efficiency and they're going to try to cut waste where it is. I don't see how that's a political issue. I think every American should rationally cheer for transparency from where their money is going from taxes, and to see the, sort of all the excess spending cut, but it's going to be a drop in the bucket, literally, no matter what they do. Like, I cheer for it, but I don't expect it to cure the debt crisis. But the bottom line is the debt ceiling, maybe there'll be some sort of negotiating or some sort of mainstream media panic, but they always just lift the debt ceiling. They always take on more debt. There seemingly is always a buyer for that debt, and the scam keeps going.
I appreciate your blunt perspective, because it's very true. Like, there is every time we hit this debt ceiling, and this time when we hit it, what did we hit? We hit this like a week ago, didn't we? Like, nobody's talking about this. Nobody.
I had it at 36 trillion, like just watching the debt clock like a month ago. So we're 300 billion past that. I remember when 300 billion was a lot of money.
Yeah, now it's nothing. And as you said, it's just the cycle is clear here of it's going to lead to, risk assets are going to increase, inflation is going to increase, and we're going to continue going down this path. But it doesn't feel, the concern isn't there. Trump feels like he wants to eliminate it altogether. Like there, it's crazy. It's totally crazy for you and I to sit here and talk about this so casually. But
I've always been surprised, especially over the past few years with the recession that never happened and all of the sort of negative economic indicators that should have led to a downturn. I had a guest, Matt Hogan from Bitwise,
mhm,
on my
yeah,
show, and he sort of made this quip that went viral. He said, "Governments have made recessions illegal." Right? I mean, it's basically like they'll just find some lever to pull to make sure that that doesn't happen. That's artificial, and we all know that if you don't burn out the brush in the forest, the fire inevitably will be bigger down the road. But that fire can be kicked pretty far down the road, kick the can down the road. And listen, Donald Trump, I don't know what levers he can pull or what will happen, but he makes no leaves no lack of clarity as to how he judges the success of his presidency. And that's on a booming stock market. And even now he said, Bitcoin at $150,000 in the first few months of my presidency. That's his expectation. That's how he's going to gauge his success. So you can just know whether he can pull it off or not, that's going to be what he's trying to do. And that
mhm.
only comes through further inflation, money printing, and raising that debt ceiling.
Okay, so let me just squash one thing here, though. His meme coin is not some master plan to raise capital in order to pay off the debt. Some people speculating about that, which I
That's
don't
not
know
called
about.
speculating. That's called coping. It's a different phenomenon. It's people who don't want to believe that they're watching the griftiest grifter do the biggest grift in history, which is exactly what it is. Listen, I got a lot of flack for calling it a grift. If you want me to tone down the rhetoric, I'll say gratuitous cash grab. Right? It's a gratuitous cash grab to enrich himself and his family and insiders. You can decide whether you are comfortable with that or not. That's up to you. I would say it's a net negative sort of for humanity, but a huge net positive for the crypto space because, as I said, it's showing you what you will and won't be allowed to do in the next 4 years. And if he can, thread the needle on launching two meme coins between SEC chairmen the day before he would be violating the Constitution by abusing the office to enrich himself. That's in the emoluments clause of the Constitution. This guy is going to take the governor off on all things crypto related. And listen, the positive view is that he's doing it because he wants to deregulate and believes in the technology and thinks that people should be able to build and that entrepreneurship should come back to the United States. And even the most cynical view is bullish. And that cynical view is he just did it. He's going to make sure it's not illegal. He's going to make sure he pays as little taxes on the profits from doing it as possible. He has now NFTs, World Liberty Financial, and a meme coin. And if you think about that, that's like the entire range of
Mhm.
Web3, right? An NFT was a collectible. We're calling the meme coin a collectible because we're ridiculous. But the NFTs were collectibles. And then they launched, World Liberty Financial. And to be fair, they tried to do that in a regulatory compliant way in the United States, which very few people do. Like it was only accredited investors. It was launched as a security offering effectively. And now you just have the complete like degenerate side, which is this thing has no utility. It's a joke, which was why meme coins went so crazy in the first place. It was sort of raging against the SEC machine, saying
Mhm.
it's not a security because we're not telling anyone that they're going to make money and it's never going to do anything. And so he's really, I won't even say him. So his team, maybe his sons, have experienced the entire sort of breadth of Web3 now. And to be honest, I think he has a team like he does for everything else. He says, go do whatever you want and send a tweet from my account if you feel like it. Right. I don't think that it was a master plan. But the people who are saying like that he's going to just donate all this money to like knock 50 billion off the debt ceiling. First of all, that's like a few days of spending. So it's drop in the bucket. It's just not happening. It's not happening. He did this to enrich himself, or his team did this to enrich themselves.
Mhm, mhm. Yeah, it feels obvious that that is the case. I mean, we're talking about Donald J. Trump here, not
He's
a
been launching memes
philanthropist.
forever. Trump steaks, Trump water, Trump shoes, Trump whatever. You know what I mean? He's a master at releasing things with his name on them and making money. Once again, for better or for worse. It's just that this is a turbocharged version of it. in 20 crypto is really amazing for a lot of very legitimate use cases, but it also enables, I won't call him a bad actor, but it enables just the same things on meth that you see in every other market, right? I mean, this guy basically at the top, which we know that fully diluted valuation is nonsense. He could never sell $50 billion of this onto the market. It will never actually be worth that. But the very idea that on paper he had that much wealth was probably 5 to 10 times more than he collectively made on every other venture in his entire life. And he was able to do that with one tweet in 24 hours. Shows you the power of crypto and the danger of it, I think, at the same time.
And as you said, he has a team. He knows exactly what he's doing. Maybe not him personally, but his team knows what they're doing.
Yeah.
And they're capitalists that are incredible at being capitalists and at raising funds to put in their own pockets. So, love it or hate it, they certainly know what they're doing in order to increase their wealth, and that's exactly what they're doing here, no doubt about it. If we zoom out and look at macro where we sit right now, there's been a lot of concern with bond yield rates. There's definitely, there isn't really concern about debt. We've talked about the debt ceiling. We have the FOMC has their next meeting coming up next week. What will they do with interest rates? When you zoom out, how do you feel? Liquidity is being slower than we all expected. We thought liquidity would come early in 2025. Doesn't look like it's going to come till later. When you zoom out, what are your thoughts right now?
I think there's liquidity. It's just misdirection. I think they find different ways to do it. So I think that, like, first of all, we have an obsession with the Fed, but what Jerome Powell and the Fed do is very limited and much less impactful than it has been in other cycles. I think because of the debt and the policies of the Treasury, we're in a period of fiscal dominance and not monetary dominance. So I think that's been something I've been talking about for a long time. Much smarter people than me have been talking about it for a long time, but has been clearly exemplified and proven when you see that the Fed started their cutting cycle and rates went up. That's literally the market just saying the Fed, you're wrong and we don't care, right? You say don't fade the Fed. The bond market has been aggressively fading the Fed since the cutting cycle started, right? And so I just don't. I know it's it's a data point and people deeply care and trade around it on the day, but I don't think it's driving markets as much as we think it is. Certainly not what Jerome Powell says, or if they do 25 bips or zero, right? I mean, it's pretty clear that if stock markets were at an all-time high and unemployment was truly at pretty much an all-time low, that they didn't really need to cut rates rationally. In fact, that's the environment where you would generally raise rates, right? But I'm assuming there's a level of PTSD from transitory inflation and way overshooting in the other direction, and the Fed having a long history of overshooting in every direction, that they wanted to get ahead of it, right? Or whatever would likely be coming. And you also have this sort of environment where the economic data, if you believe it, and I'm not a tinfoil hat conspiracy theorist, they revise the data when you're not looking.
But last year, every single time the data got significantly changed.
The whole market holds their breath for like job numbers, and then it trades up and down, and then quietly 3 weeks later or 6 weeks later, it's like those job numbers were wrong. And then quietly a year later, the whole year was wrong. 850,000 jobs or something they were off by at the end of the year, which was what was bullish for markets in the first place, right? So I think there's a skepticism about the data in general. I think that people doubt the way even inflation and CPI and PPI are calculated. What you feel in your heart on the street on a day-to-day basis when you look at the prices of things does not align with the data or what they're telling you about the economy. And so I think we have this situation where the data is so muddled, and one day it's good news and one day it's bad news. And we don't really know if bad news is bad news and good news is good news, because you actually want bad economic data so that they'll cut and then you'll get more liquidity. So bad news is actually good news, right? This is the kind of like the thought process that I put together for it. Like, imagine if Jerome Powell had to walk down the street and just to every 10th American say, you lose your job for the good of the stock market. Right? Because we need like unemployment to skyrocket so we can cut rates. You know what I mean? And people are literally cheering for like job numbers to be bad, more people to lose their jobs so that the Fed can cut and stocks can go up. So if you just, it's like we're in the Stranger Things upside down, right? And I
Mhm.
think that people are just, can I say bad words here?
For sure.
I think people are just calling bullshit on the data and calling bullshit on the Fed. And right now it's Donald Trump and the Fed's going to matter less, you know? And so don't really care what they decide to do at the next meeting. I think we obsessed over that for long enough. We know that whatever they're doing is not working.
Mhm.
Bottom line,
Mhm.
like, I think rationally people are like, cool, they're going to cut rates. My mortgage should come down if I'm buying a house, and mortgages are like the highs, over 7%. Just doesn't make much sense.
Mhm. So what are you watching if we're in this fiscal regime versus a monetary regime, if that's the perspective for macro, what matters to you as an investor?
Dude, I've given up trying to predict what's going to happen in 6 months or a year. I like take the surfer mentality, man. You ride the wave that's given to you. You know that that wave's going to end, but you enjoy every second of that wave. And you know there'll be future waves to ride when you paddle back out. It's really how I have to view markets right now. It's very clearly bullish and risk on. And we all know that as investors and traders, the last thing you want to do is try to find the top, like
Mhm.
aggressively try to short the dead top of the market. You could be right directionally, but 6 months or a year early, and it eventually crashes. Listen, we will get a recession one day, whether it's this year or 2026, 2028. I have no idea. Probably get a Great Depression, one day, because markets come in cycles and there's booms and busts. But right now, there's a lot of optimism, and I'm not going to short into that optimism, right? Because listen, you could short Bitcoin thinking that it's at a top, and theoretically you're right, but it comes at 125 instead of 106, and you're wrecked and poor, right? And so I'm going to ride it until there's some clear reason not to. So my view right now is it's risk on. Like, I'm going to always have my eyes wide open looking for bigger signals. Um, but I don't see them wanting the stock market to crash now.
Mhm.
It's going to
Yeah,
get ugly at some point. I mean, we all know that.
yeah, yeah, and the timing, it very difficult to predict that timing. Like, could be, you said 2026, 27, 28, could be 2030, could be 2032. Like, it
It was
really
supposed to be 2023 last I checked.
yeah, what
Yeah, if you
did
look
that
at
happen?
and if you go back actually to just show how bad humans are at this, even the smartest ones, I think it was in 23, like at the end of 23, we were supposed to have already had 3 or 4 rate cuts. If you were looking at the betting markets and the dot plots and how analysts were viewing it, and it just never happened, right? We were
Mhm,
supposed to be in a recession. We were supposed to be cutting. They probably shouldn't even be cutting already, right? And they might be realizing that now. So maybe we get a pause, and then that spooks markets, and we get a correction. But like, what happened to like simple normal 10 to 15% stock corrections?
mhm.
Should still happen
Yeah, yeah,
rationally.
and I think that's a very likely scenario, is that they pause, we get a correction next week. That seems like the most likely. I mean, that's what the market's betting
And
on.
by the way, like, for the Trump presidency, if you're taking the most cynical view again, like, they rationally know you can't just go straight up for 4 years. Better to correct at the beginning and have it
Mhm.
completely forgotten by the second or third year than to crash in the
Mm.
fourth year.
Mhm, mhm. Well, especially when Trump's got the midterms circled on his calendar for 2026, and
Right.
he is not losing that. So that timing matters way more to him than
And,
the timing right
and
now.
whatever party's in power almost always loses that. It loses
Mhm,
one, loses total control. Like, they lose either the House or the Senate, or some aspect of it, because it's really, really hard to govern when you're fully in power. We've seen that over and over again. Really easy for either party to scream from the sidelines what the other ones are doing wrong. And then the minute they get in there, it's like dysfunction and 75 votes on the Speaker of the House or whatever it was, 63, whatever it was. Just very, very hard to govern, even when you have a majority, because then people start to get greedy. And so I agree with you. I think that things are going to have to be good right before midterms for them to win, and things are going to have to be very good at the end of the cycle. So right now would be logically a good time if
mhm,
we were going to get a 10% correction. I'm not saying we will, but make a lot of sense because it'll be
mhm.
long forgotten by the
Well
time it
well,
matters.
even just the correction that we got to start the year was pretty small. That was a correction for ants. Like,
Yeah.
I thought for sure Bitcoin would drop 25, 30%, and we only got down, I think, like 18% was like and that was like a candle that we hit 89,000 for like a minute. Like,
Yeah, I mean, we just haven't had like that was while I was recording my Monday show 8 days ago, and like it was funny. I had people going, "Scott's really distracted today." It's my Macro Monday show with Mike McClone, Dave Weisberg, and
yeah,
James Lavish. They were commenting like, "What's Scott doing?" And I like at the end, I was
you're
like, "I was buying Bitcoin
you're
at eighty
buying.
nine thousand five hundred and buying Solana buying Solana at 175." And sorry guys, like this is my chance, you know.
Yeah,
Um,
yeah.
that was an irrational dip to me. Like I kind of had a very good gauge of what was coming, and I aggressively bought like very publicly while live because
Amazing.
me, those
So
are
do you,
just
so here's my question. Do we still have that correction coming then? Like in the next and I know you don't have a crystal ball and it's a difficult question to answer, but like let's break down the facts here. Trump in office brings volatility, right? Certainly upwards momentum, but definitely volatility. We most likely will see a standstill from the Fed on the rate next week. We don't really have any, we don't have a lot of short term catalysts, not from the macro side, right? We have the debt crisis. So it feels like, but then at the same time, also Q1 historically is one of the best quarters for Bitcoin, especially in a bull market. So I don't know. I mean, I can't decide
I
which
think
way
it's
it'll
all
go.
systems go. I mean, listen, we just got, as you said, an 18% correction, but this summer we did go down 34, 35%, right? I
True.
think we topped
Yeah.
at like 74 and then, dropped to just below 50. That was like a healthy Bitcoin bull market correction. You used to get 5, 6, 7, 8 of those in one bull market.
Mm.
At this point, we've seen that in both directions, we've had some dampened volatility. And I think that's because of the institutional involvement in the ETF. So I think like on the way up and down. So maybe that caps the upside as well, by the way, rationally. But up and down, what used to be 40, 45, 50% now becomes 30, 25, 20, 18%. Right. So I think we just had the dip. We went from 108 to effectively 89.5. Right. It's a pretty good high beta to what was happening in other markets dip, which is why I bought it. Like I kind of just looked at a chart, I saw it happening. It's a good day. But yeah, I think that we should be heading up. I mean, I view Bitcoin largely, except for in certain moments when everything correlates naturally, black swan events or downturns. People sell what they have to, not what they want to. And Bitcoin, you can sell at midnight on a Saturday when you can't sell anything else. So Bitcoin always kind of suffers worse on those downturns. But we have nothing but tailwinds for this industry that we've never seen in the past. And listen, it scares me to be so bullish. It feels like I should be my own counter indicator. But like, and there's market, there's whales who know that and are going to take advantage of it. But like, we're finally getting a crypto friendly administration. We even have talk of a strategic Bitcoin reserve, which if that happened, by the way, even in a very small amount, even if they didn't buy and just held, that forces the game theory of every central bank in the world, because the United States did it, to add Bitcoin to their balance sheet. That's Bitcoin at 500,000 in a matter of months, right? Just by sheer supply demand dynamics, right? I mean, you have a pro Bitcoin SEC chair, pro Bitcoin CFTC chair, pro Bitcoiner at the Treasury, who literally had to divest his Bitcoin position to become the Secretary of the Treasury. Even in the non-Bitcoin related positions, you have RFK at Health and Human Services potentially, Elon Musk, Vivek Ramaswamy. I mean, all these guys are literally Bitcoiners. And the election was effectively won by the crypto industry and technologists and billionaires in general, mostly named Brian Armstrong, quietly behind the scenes, right? So it's all systems go from that perspective. We're already seeing Rumble buying Bitcoin and, Metaplanet in Japan following the MicroStrategy playbook. Mainstream like view of MicroStrategy and what they're doing and seeing it for now be exceptionally bullish. We know Fidelity is saying 5 more nation states at least will adopt Bitcoin this year. So listen, you got corporates, you got nations, you're going to have sovereign wealth and endowments and pensions, all these people coming in through the ETFs and the new regulatory environment. Like, maybe I just don't see it. Maybe I'm blinded. I don't think so. But like, that's a hell of a lot of buying pressure. Not saying
Yeah.
those people can't sell. I'm not saying we can't get corrections, but most of these people still can't even buy.
Mhm. Mhm. Yeah, yeah, we've talked about that at length on the show. So let me ask you this: uh, The question that I think is on a lot of people's mind is typically at this point in a bull run is when we would move from Bitcoin dominating, we would move into altcoin season, right? There's this question is on everybody's mind. Is like, is it different this time?
No, buy Ethereum right now. Okay, no financial advice, not financial advice. Every counter indicator I want for an asset exists right now for Ethereum. And
Okay.
and if this cycle is like the last ones, which it doesn't have to be, you see Bitcoin, then Ethereum, then everything else, right? And so I think Ethereum, the Ethereum ecosystem are beaten down. There's FUD about Vitalik. There's FUD about the governance and what happens with the Ethereum Foundation. Price has hit a just incredible zone of demand. I've literally been watching for 2021 on the Ethereum Bitcoin pair, which I've had marked for now 3 years to buy if it ever came back to there. And people are saying Solana is eating Ethereum's lunch. But listen, last time I checked, all the TVL in DeFi is on Ethereum. Everything else is a drop in the bucket. They're exciting. They're dropping the bucket. And BlackRock, you saw what happened when BlackRock adopted a Bitcoin spot ETF and got that approved. Well, in the same breath, Larry Fink has been talking about tokenizing everything, and BlackRock is tokenizing their funds on Ethereum. Right. So I think it's just like the beaten down, redheaded step cousin, middle child that is just going to absolutely boom. But no, I do not think things are different. The timing will be difficult, as it always is. It's very hard to beat Bitcoin, very hard, because you can only go into altcoins at that perfect moment right before Bitcoin rages again and steals everything you just made, at least if you're trading, with Bitcoin as sort of your standard. A lot of people now, because of stable coins, they say, yeah, I'm up in dollars, but they don't realize if they had just stayed in Bitcoin, they'd be up in more dollars, with time. But yeah, I think we're going to see a massive, massive altcoin cycle. There are things that concern me, a ton of supply coming on the market, unlocks, too many tokens, memes capturing sort of the zeitgeist, which is certainly sucking liquidity. We've had this sort of Bitcoin and memes barbell with not much else performing in between. I think that's going to change. I think that these Wall Street guys, these hedge funds, they're bigger degens than any of us when you really get down to it. And they're going to follow the same path. They're going to see Bitcoin steady out. They're going to say, well, what? There's other things. And they're going to go, look, dude, if XRP and HBAR and Algorand can pull 5-6 X's after being, dead dinosaurs for so long.
Coins.
Come on, man. It's going to go nuts.
Well, mic drop. I'm going to end it there because that's a great spot to end it. Mike Scott, it's been an absolute pleasure. Thanks. Say him, mic drop, Scott Melker.
Let's call it Mike Road.
Show.
Mike Road.
Mike Road, the Melker Show. Appreciate you joining us today, Scott. Thanks so much for your time. Everybody listening in, appreciate you. Scott mentioned Matt Hogan. Matt Hogan's on the show later this week. Check back in on Friday. He'll be on the show. We also got James Safart. So we'll be talking about ETFs, which is a big part of this coming cycle. I think getting his input on which ETFs might be approved next and which ones will fly. Scott, thanks so much for your time today.
Thank you, man.
Have a wicked awesome day, everybody. Thanks for listening in. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.